Steve, welcome back. Slightly different change of scene.
Nice to be outdoors.
Right?
Yeah.
It's good to be outdoors. We're, a few minutes walk away from City Hall too. New York City is a very big municipal bond issuer. Can you give us an overview of the municipal bond market?
It's a big market. It's about 4.2 trillion, 30,000 odd issuers, 900,000 bonds by some count. The indices can dissect that in different ways, but it's a big market, and it's actually somewhat of a fragmented market, which is also interesting. Something like 3 to 4% of those bonds only trade each day. So if you flip that stat, 96 to 97% of them don't trade on a given day, and that makes things a little bit challenging.
Can you tell us a little bit more about the municipalities themselves? Like, why do they issue these bonds? What do they use them for? How does it keep the economy going?
Municipalities are going concerns. They have to provide services to the cities, the inhabitants of those cities. So think about providing water, sewer, electricity, all of
Subway.
that, right? Subway. So you'll have different types of bonds. So there are what are called general obligation bonds, GO bonds. Those are what they sound like.
Yeah.
General funding for municipal activities. Then you have revenue bonds, which are attached to very specific projects. So you can have water bonds or sewer bonds. They're backed by the revenue of the bonds. GOs, general obligation bonds, are backed by the taxing authority of the municipality. So its ability to repay is based on its ability to raise revenue through taxes, whereas the project bonds are based on the revenue from the project.
From the projects themselves. What are the main differences between municipal bonds and, say, government bonds, like the U.S. Treasury notes, right?
So municipal bonds have tax advantages. They are exempt from federal tax. If you buy a bond that's issued in a specific state that you live in, you can deduct the interest from state taxes as well. Right. So a local bond, the interest is exempt from local taxes, state taxes, federal taxes, right? So that term is triple tax exempt. So those bonds can be attractive depending on the tax bracket that you're in. If you're in a lower bracket, you'd have to do the math to see if it makes sense versus treasuries. If you're in a higher bracket, it could prove to be relatively attractive.
You mentioned the stat earlier on, 900,000 individual bonds issued by 30,000 different issuers, right? So an extremely fragmented asset class. How does the ETF make sense for investors?
This is where I think the ETF really shines. I think where there's a really powerful use case is exactly in a market like this, when you have all this fragmentation, when very few of the bonds are actually trading on a given day. When you do trade those bonds, it can be expensive. What the ETF does, it takes this fragmentation and it basically organizes that into a portfolio. That portfolio then trades on exchange like we talked about. But the power here is that you can trade thousands of bonds on exchange through a product like MUB, which is tethered to your national municipal index. You could not literally do that in the underlying market under any circumstances. It would be actually impossible to do that.
Right.
So think about the value proposition of trading thousands of bonds a penny wide on exchange.
Are there any misconceptions about munis and, who the asset class is specifically catered towards?
So it's not for everybody. I do think investors who are in those higher tax brackets oftentimes can invest and benefit from that. There are circumstances where those bonds do get so expensive though and the yields compress where even then you'd have to really take a close look. So it's worth doing the homework.
Tell us a little bit about MUB, the ETF, right? It tracks a nice index. Talk to me a little bit about, the constitution of that ETF and how it could help individuals from a tax perspective.
Yeah, MUB is a large liquid fund. It's our flagship fund. It's around 40 billion. It has roughly 6,000 bonds in it. So again, think about that, being able to trade 6,000 bonds simultaneously on exchange. It is a national index, however, just by the weight of issuance and the amount of volume coming from certain states, it does have some concentration. So for example, California and New York are the top issuers. New York is around 20%, California is around 17%. I think Texas is third, around 12%. Yeah. So you have some concentration there, but it does give you diversification across the rest of the states as well. And the other interesting part about it, it trades $500 million a day.
Wow.
Average bid-ask spread is about a penny. Average premium is around 10 basis points or something like that. So to your point earlier, it is a very efficient way to trade municipal exposure.